and personalized education that defines our school. Come see how our mission and vision come to life each day. For more information, visit us at oakmountain.us so that you can discover your journey on the mountain, where every path leads to purpose.
National headlines and the local stories you care about. WLBB, Carrollton, News Talk, 1330, FM 106.3.
Good morning. Welcome to the Community Voice. I'm Steve Graddick, your host. I'd like to have you with us this morning. We've got a great show. It's our annual visit with Dave Pollard, registered principal at the investment firm of Raymond James. Good morning, sir.
Good morning.
Let's just jump right in because we look to you to keep us up to date and informed on the stock market, the wild, wonderful, crazy world of stocks, bonds, ETFs, index funds, et cetera, 401ks. Record highs all this year for the stock market, good or bad? How do you interpret it?
Well, it's good. Record highs are always good.
Okay.
And we're set to open up huge today. So, yeah, it's very good. I mean, what the problem is that with the way the world is right now, the way we feel uncomfortable, just in the world itself, you have to step back and go, why is the market doing so well? It seems like it shouldn't.
Well, we're
but
cautious.
Oh yeah, it's doing well. Yeah, that's right.
Okay, well, along those lines, to emphasize the point, gold to silver is up 52%. 56.2% this year. So can we interpret that as being a reflection that the market is not as strong as these record highs would indicate?
Well, I don't know if you can. I don't know that I would look at it that way. You know, the value of the dollar this is going to get really confusing. Interest rates go up. The value of the dollar went up. Interest rates have started coming down. The value of the dollar has been coming down while inflation has continued to go. It continued to increase, but at a smaller pace. And so gold, which has always been an inflation hedge, is finally, when the dollar started going down, gold started going up. So what is the reason for that? Well,
that's a good question.
The reason is that people are selling dollars and they're buying gold.
Why?
Because interest rates are going down. With interest rates going down, inflation starting to come down, then gold is seen as the safe haven. So we still have a lot of going back to what I said just a minute ago. People just don't feel comfortable, and gold is always seen as a safe haven. The dollar has been seen as a safe haven currency. And then you've got the influence of Bitcoin with interest rates, oil. Is oil being bought in dollars, or is it being bought in something else? So at the end of the day, gold has been very attractive. Now, the problem with that is that people have been promoting gold for the last 10 years. Only for the last 2 or 3 years has gold made a real run. Now, gold has topped out, silver has too, and has pulled back around 8 or 9% just over the last week or so. The reason for that is interest rates have started coming back down, and now the dollar is starting to gain traction again. People are selling gold, and they're moving back into dollars. So there's your answer. I hope that was really clear.
It's clearer than anything you've ever said.
Exactly.
Well, now the interest rates, I believe, isn't there a date? Wasn't it late last week that the interest rate were pulled back again, or where are we exactly?
No, so the Fed is meeting this week. They will start that tomorrow.
Oh, yeah, it's the 29th.
Yeah, they will start that meeting tomorrow, and then they will make their announcement on Wednesday as to what the Fed is going to do. Now the Fed, what they control is a Fed funds rate, which is what is charged to banks for overnight loans. And what they are projected to do is to cut their rates another 2 times this year. Now, that's not guaranteed that they will do that. That's sort of what the markets think they're going to do. So the big question is they might cut 2 or 3, maybe once, maybe twice. But then the question becomes is how much are they going to cut? So some people are saying 1/4 basis point at the next 2 cuts. If they came in a surprise with a 50 basis point, a 0.5% cut, 0.75% cut, then I think we're going to see money flow into the markets, and the markets have a great movement in the end of the year.
People paid less for their dollars in terms of investments. That would also bode well for gold.
Well, so there's a limited supply of money.
Right.
So money is going to go to where it thinks it can get the best return on itself. And right now, what people want to do is they want to move back into stocks. We bought bonds.
Right.
Because interest rates went up. If you want to look at it a different way,
okay.
When CDs went to 5.25%,
yeah.
People started getting out of their stocks
Correct.
and other places and said, hey, I'm going to go to a CD. We haven't seen interest rates on CDs at 5.5%, 5.25%. It's been years. So a lot of money moved there. Now those rates are starting to move back down. I think you can buy a CD right now, maybe locally 4.5, 4.3, maybe for 7 months. So now we're starting to see money flow out and say, you know what, I think I'll move this money back into the market. Things do look good. Even though we're at record highs, people have this feeling that, hey, the market is the place to be right now. So that's going on everywhere, not just here.
But so much of it's emotion in terms of gas prices coming down. Inflation is still steady, I think 3%.
Yeah, so let me interrupt you real quick.
Sure.
So gas prices have come down a little bit. Oil is around $61 a barrel. We've seen it fluctuating back and forth. Now, if we see oil get down below $60 a barrel, low 50s, upper 40s, and I don't know that we're going to see that. Who knows? But then we'll see gas prices obviously come back down. Now, here, what did I stop you? You're fixing to say something. I lost my train of thought.
Well, I was going to continue that also during the government shutdown, we don't know exactly what the labor market is doing right now.
Well, no, you said something else. You said oil and you said gas prices.
Gas prices, inflation's been...
Inflation. Thank you. I lost my train of thought.
3%.
So here's the problem with inflation. Okay, and I used this example a year ago when I was here, and I'll remind you of it. If Swole Joel, who weighs, Joel, how much do you weigh? Okay, so he's at 225.
No,
if Swole Joel goes from 225 right now to, by the end of the year, Joel weighs 275. He's put on what? 50 pounds, but
yeah.
that's about what. He's giving us the muscle sign. What is that? Maybe a 20% increase. Okay, so but now Joel, who weighed 225, he weighs 275, but he didn't lose back down to 225, right? But he's increased his weight 3% every year. So now he's 275. Now he's 280. He's 285. His weight's still going up, right?
Right.
So that's the way it is with inflation. Inflation jumped up.
Right.
And now it's instead of increasing 20% a year, now it's only increasing 3% a year.
Right.
Price of eggs is not going
but
back down.
But that's kind of what's quote unquote normal.
Yep. What's not normal is the jump that we had to get there.
Right.
And so there's this idea that, well, if we can have a target rate of 2%, that sounds good. But the problem is we're already dealing with inflated prices. So that's the big issue. Yeah, that's the big issue right there.
Once you inflate, it doesn't go away.
That's exactly
Once he gains
right.
that 35 pounds, he's
well,
not losing.
Well, it was 50 pounds. He's not losing it. He's adding a little more every year.
From 35, he goes on up. He keeps going up. And 35, okay.
Yeah.
So basically the jump in inflation, the impact of that is still with us.
That's correct.
Okay, with that clarity, Dave Pollard is our guest, registered principal at investment firm Raymond James. We'll be back with more after this.
Imagine a place where every heartbeat is monitored with the utmost care, where emergencies are met with swift attention, and where cutting-edge technology enables precise and timely treatments. At Tanner Health, every patient's journey is a testament to resilience, a story of strength, healing, and hope. We go beyond treatment to redefine what compassionate care truly means. That's Tanner Health. That's care redefined. Learn more at tanner.org.
Do the math. At Oak Mountain Academy, our average graduating class has just 12 students. We celebrate a 100% graduation rate with more than $10.5 million in college scholarships offered. Plus, 96% of our students are accepted into their top choice college. Do the math. Can you see the value of an OMA education? I'm Patrick Uran, head of school at Oak Mountain Academy, and I'm here to help you do the math. For more information, visit us at oakmountain.us so that you can discover your journey on the mountain, where every path leads to purpose.
Good morning. Welcome back to the Community Voice. We're very pleased to have in studio Dave Pollard, registered principal at the investment firm of Raymond James. We're talking all things stocks and bonds, investing, et cetera, et cetera. Let me go ahead and hit this because I think this is important. Not that the rest of it's not. Artificial intelligence, NVIDIA, Broadcom, so many, TSM. The AI phenomenon of the last several years has been enormous, and it's gotten everybody's attention. But like the dot-com, I think it was the 90s, are we in an AI bubble?
No, that's a great question. At the end of the day, I mean, we can talk about every topic you want to, but what people really want to know is where can I invest my money to get a really good return on it? The interest rates, inflation rates, gold, silver, Bitcoin, all of that. That's just the stuff. But where can I go to put my money and I'm going to get a good return on it, and hopefully safely? So with that said, money appears to be flowing into the AI stocks, and it is no secret. AI is changing the way we do everything. Matter of fact, I was watching CNBC earlier this morning. They are in New York with a Tesla robot and a car that's driven by this robot. And when Becky Quick was talking to the robot, it was like there was a guy inside of this suit she's talking to, and it could have been, but it was supposed to have been a robot. And I was just amazed by what the AI stuff is doing, and it is literally changing everything that we do. But to answer your question, because you're fixing to give me another question, the way how does it compare to the dot-com? That's a great question, and it's probably what we've talked about the most, and that is, if you go back to the late 90s with the dot-com, you may remember WorldCom, MindSpring, and all of those companies, and the price of their stocks were going up, 10, 12 points a day. I mean, it was just crazy. The problem was there was no earnings numbers behind these companies. They were losing money. Now, the idea was good, and what was going to happen down the road was really good, but there was only a handful of companies that actually made it through that period, and those that made it became stronger and stronger and stronger. So AI is a little bit different in that than that in the late 90s, in the fact that the companies like NVIDIA, companies like ASML that is a chip manufacturer, some of those, they actually have earnings numbers in other parts of their business, and now AI is becoming a big part of that, advanced micro devices. So it's a little different in the fact that you're owning companies that actually make money, although there are the AI companies out there that are betting on what's going to take place down the road.
One thing, and this is kind of my trademark kind of question, they say that the targeted time for Communist China to invade the Republic of China on Taiwan is 2027, yet 92% of chips made are made by the Taiwanese or Taiwan Semiconductor Group. So if there's a invasion of Taiwan, it would seem like the chip manufacturer world would be turned completely upside down. Have you heard anything like that, or is that just me?
Well, no, it's 2025. I don't know what's going to happen 2 years from now. So, I mean, obvious that sort of goes back to why is the market going to all-time highs when we feel like that the whole world is a powder keg waiting to go off.
Well, to in certain areas. I mean, certain areas, and we do have further Abraham Accords in the Middle East, so hopefully energy prices will come down. So if we can negotiate something to stop the Ukraine-Russian war, if we can get on the same tariff channel with communist China, I mean, that's not bad.
No, that wouldn't be bad at all.
Wouldn't be bad at all.
No.
So,
but, I mean, if they're going to attack Taiwan, your question was, if they're going to attack Taiwan, wouldn't that make it difficult for the chip manufacturers? That'd make it really difficult.
Yeah, 92% are manufactured in Taiwan. That's one reason Communist China hadn't invaded, because they don't know how to operate the machinery.
Exactly, I get that.
Yeah, so I mean, that's a question nobody but me, of course, is asking. Okay, let's stay a little bit on the economy. I understand we've had somewhat of a boom. GDP's 3.8 for the second quarter. That's really good, right?
Yeah, right.
So how does it affect your world of investing?
Well, the headlines drive everything that we do. Let me give you an example of what I mean by that. We had a good year in 2024. We got off to a great start in the first 3 months of 2025. And then in February, March, April, we started hearing about tariffs. And so when the tariffs actually did hit, there was so much talk about it that the markets hit a top and everybody started, if they put these tariffs on and blah, blah, blah. And then the tariffs went on and the market collapsed. I mean, we had a 18 to 20% drop over the course of a month or so. And then I guess it was around May when the headlines came out and said, we're going to ease up on the tariffs. So the world did not come to an end, and it did seem to be a negotiating tool that this administration used that actually didn't hurt the markets or didn't hurt inflation numbers or earnings numbers whatsoever. And what it turned out to be, as we look back on it now, was a really good buying opportunity. We went through, over the course of the summer, which is typically a sideways. Not a lot of conviction in the market. People are on vacation. They're thinking about doing stuff in the summertime. And typically in August and September, we will see markets that will sell off. That was the exact opposite this year. Now, we came into October, and just over the last few weeks, the headlines have been interest rates. It has been what's going to happen between negotiations between America and China, and that has led to some profit taking over the last couple of weeks. Over the weekend, what we saw is this administration, in their meetings with China, it looks like those trade barriers are going to be opened back up. We had a huge move in the markets on Friday, and it looks like we're setting to open up with a huge open in the markets today. So the answer to that is the headlines on a short-term basis, they drive everything. Long-term, though, what drives stock prices are earnings numbers. So when we look at an economy that is, when the GDP is reported at 3.8, 3.6, we hear that inflation now, the target is 2, but maybe we're somewhere in the area of 3. Then we have to put the blinders on as to what's going on geopolitically, what's going on in the Middle East, what's going, is China and Russia and North Korea, these guys lining up? Are we seeing things take place on the planet right now that in our particular time in history that were prophesied 3,000, 2,000 years ago? Are we seeing that? So if we put the blinders on and we just look at data in the markets and we look at where's money flowing to, what are earnings numbers doing, what's the interest rate environment looking like, if we've got those blinders on, this could be as good a time as we've seen in a while to go into the market.
When Reagan followed Carter, it took him about a year or two before the economy started to boom. Similar comparisons. Are we potentially looking to a boom market in the next 2 to 3, 4 years?
Well, I say this to you every time I'm on here. It's like Yogi Berra said, it's difficult making predictions, especially about the future. I do believe that if a lot of the policies that this administration appear to want to put in place, I think they are going to be very conducive for the market. We go back to your AI comment or question. If we look at it from a purely how's this going to benefit us economic look, AI will help companies be more profitable, which means their earnings numbers will be better, which means stock prices will go up. So are we about to go into a period of an economic and a market boom? I don't know, but the fundamental part of it looks as though that we could.
So it's not just the chip manufacturers; it's all of industry.
Yeah, well, I mean, you think about this, okay? Going back to your question of if China blows Taiwan up, what's going to happen to the chip market? The black swan. And what the black swan is the event that nobody is looking for.
Right.
In the event that the black swan flies in and something happens, all the chips are off the table.
Right.
Other than that, it looks like things could be pretty positive going forward.
Our guest this morning is Dave Pollard, registered principal at the investment firm of Raymond James, and we'll be back with more after this.
Imagine a place where every heartbeat is monitored with the utmost care, where emergencies are met with swift attention, and where cutting-edge technology enables precise and timely treatments. At Tanner Health, every patient's journey is a testament to resilience, a story of strength, healing, and hope. We go beyond treatment to redefine what compassionate care truly means. That's Tanner Health. That's care redefined. Learn more at tanner.org.
Oak Mountain Academy specializes in a customized designed academic approach tailored to meet the needs of our families. Our lower division prepares students with the necessary foundation to build excellence. Our middle division provides students with over 15 course offerings, providing them with opportunities to explore their talents and gifts. Our upper division provides personalized academic journeys, allowing them to achieve their dreams. I'm Patrick Uran, head of school, inviting you to journey with us. For more information, visit us at oakmountain.us, where every path leads to purpose.
Good morning. Welcome back to the Community Voice. I'm Steve Raddick, your host. We're also on Facebook Live, besides being on FM 106.3, AM 1330, Facebook Live on News Talk 1330 Facebook page, and streaming live to our YouTube channel. I guess we kind of have fallen into kind of an AI theme this morning, but that's okay. I mean, a lot of people talking about it. It's certainly of interest. And certainly locally, the big topic is data centers, which is nothing more than a giant, humongous bank of supercomputers with super chips, so that everything, I mean, basically it's the so-called cloud. So are data centers going to fuel another economic boom, do you think?
Well, I think certainly they could, and you're exactly right in the fact that a lot of communities that these data centers are going into, there's a contingent that is absolutely opposed to them, and then there's a contingent that says, oh, no, we need them. The reality of it is, as far as I can tell, they use large amounts of water and they use large amounts of electricity.
The older ones do.
The older ones do.
In terms of water.
Yeah, and large amounts of electricity, and that's the big issue is, can the power grid handle it and all that other kind of stuff? Well, on one hand, you go, oh, we can't have this because, on the other hand, it will cause companies like Southern Company and local companies around here, Aubrey Sylvie, some of those guys that are around here, it will cause them to come up with ways to provide that electricity. So on the one hand, I can understand the risk that it causes with the electrical generation, but another part of that is anytime there is a need, there will be a company or there will be an industry that will step in and answer that.
Small market reactors.
Exactly.
Thank you.
There you go.
You can get a small one for $1 billion.
That's right.
I want one.
You probably got that laying around.
Yeah, sure.
You've got a pocket full of money. It's friends you need.
Thank you. We've got an event you're involved with that we want to talk about. But before we do, I just kind of a general. I heard the other day about Warren Buffett was not such a great investor at all. In fact, he just started early and he held long term. So that's kind of the active versus passive school of thought when it comes to investing. So if you start early, you invest it, you leave it alone, you let the swings of the market up and down come and go, then eventually, like Warren Buffett, you'll have a few $1 billion. Do you agree with that?
I think that there are markets that are conducive to passive investing, and I think there are markets that are conducive to active investing. So passive investing means I bought Southern Company 30 years ago and I never sold it.
Coca-Cola.
Coca-Cola. That's a great story to tell, especially here locally. If we use Coca-Cola, there has been times over the last 40 years, in particular 45 years, that Coke hasn't been such a good investment to own. You may remember New Coke in the 80s. The stock lost half of its value because of New Coke. So there has been times that it has been good to be a buy and hold investor over the long term. There has been times where markets have been very volatile. You may remember from really late 1999 all the way really through about 2015, 2016. That was called a structural bear market, and what that means is if you went to sleep in 1999 and you woke up in 2015, you basically said, man, the market has moved sideways. What we know is there was a crash in 2000 and 2001. We know there was another crash in 2008, but there was market volatility up and down. So you needed active management at that point. You brought up ETFs in the introduction. There are ETFs that match indexes. One of those is the S&P 500, and where people have found good returns because we've been in such a good market for the last 10 years that they've been able to buy the S&P 500 representation through an ETF, and they've seen their money grow 17 or 18% a year. Now, that's not normal. Normal for the S&P 500 over the last 100 years has been about 8.5%. But we've seen over the last 10 years about 17 or 18% on average.
Well, you're local. You're here with Raymond James, and if anybody needs to contact you, they can simply find you in that location.
Right.
We've only got about a couple minutes left, and you've got a special event coming up you're associated with, and a good friend of the station's, and understands the keynote speaker, so tell us about it.
Well, every year we started an event called Just One More Man. We have done this event the first Friday of February for the last 4 years. I think maybe it's 5 years. I'll have to go back and see. And this year, the Lord just laid it on my heart to try to get a hold of a guy named Jeff Foxworthy, who is very well known. And when I first started thinking about him, the thing that came to my mind was, that's Jeff Foxworthy. I'm Dave Pollard. I don't know anybody. There's no way I can get a hold of him. Through a friend of a friend, I was able to connect with him, and he is going to be our speaker this year. Now, I said to you that we do it the first Friday in February. We had to change that this year. And I said to him, I said, Jeff, when he agreed to come, I said, Jeff, I've got 2 dates available, and I hope one of these will fit on your calendar. I said, the first date I've got available is February the 6th. That's the first Friday in February, and that one's available. I got it reserved. The second date that I've got available is whatever day you can be here. And he thought that was funny, and he said, I can't do the 6th, but I can do the February the 20th. So it's going to be, I guess that would be the third Friday of February this year, and it will be at where we've been holding it the last couple of times at West Georgia Tech up in Waco.
People want to learn more or get in touch with you, how should they go about it?
JustOneMoreMan.com. We will have it on that website, be able to buy tickets through there also.
And I've heard him speak one time. He's absolutely astounding.
I've been to several of his shows, and he's hilarious, and I'm pretty sure it won't be quite along that same line.
But it'll be good.
Yeah.
Well, I enjoyed it. I hope you did.
It's always a blast.
Yeah,
always.
I didn't really throw any trick questions at you, but I should have.
Well, I don't know. Gold and silver was a pretty good one.
Well, there you go. Dave Pollard's been our guest this morning. His annual trek down here to the studio, registered principal in the investment firm Raymond James. Thank you for listening. Thank you to our sponsors. Go out and make it a great day. You're in tune to WLBB Carrollton.